Today's Wednesday, or not Wednesday. Today's Friday, December 29th. Yesterday had a really good day visualizing, seeing price action. But full disclosure, I messed up. Got a bit too aggressive with pushing the button. So this is where we are right now. We just completely overlapped our progress from the previous week. But hey, in the grand scheme of things, it is what it is, and we'll recover from it, learn from it. There we go. So we hit our max stop loss from for this account. Um, Took back all the $2,000 gains that we made in one single day last week. So again, the goal is to just average 400 bucks a day, just to prove to ourselves that we could do that for a consistent period of time, and that's all we need. Of course, 400 bucks isn't nearly the amount that we can make in a given day. It's much more higher, but um, starting with a very low, humble target and eventually scaling up higher. All right, so I don't know why it's just so slow. That's good. So, anyways, it's a new day. It's not like we lost actual money. I mean, $3,000. I mean, come on now, we could get that back within a single period of time. Let's look at dollar. I don't know why this December contract is. You know what? I think it might be on my phone, but I don't think it is on my phone. All right, well, what do we got here? So no, we don't want this. For dollar here. It's a dollar, as it's suspected, coming out into this fair value gap. Now it's moving up. Nearest bearish order block will be right here. We could see this, I believe, as a manipulation leg to the downside. So for this reason, I'm bearish on our indexes. Yeah, that looks good. Let's keep that there. So I'm bearish on our indexes. Starting off with the daily, no need to look at the index. We looked at that already. We're, we're well above. We reached our weekly target. So, daily, so we're looking at daily. Yes, bearish order block or bullish order block down here on daily. We're 10 points away from that, so I definitely think we can um, see that daily order block. We have it. Daily order block. Now Nasdaq still remains the same. I like how we just ran up into previous days price action, and I do believe we may even go back up there again and continue to the downside. 4 hour, looking for order blocks, internal range liquidity. So we are in the distribution phase, right, on the quarterly theory. Um, Expansion distribution, so we should see consolidation shortly after this. So I like how we had this run up, come back down. It just looks like one of those typical retracement legs up. Continue to downside. One, two, three, four, five candle run up, down. This is 4 hours, so and we went right up to customer question on that. I like that. So we have this fair value gap here. It's busy. Do believe we can go down in there. And this entire price leg here has me interested. And then what we have here. Yeah, so constant crusher thresholds down here. We do have this 4 hour order block right here. So let's see if we can get return out here. OB. So the video from yesterday was not saved. I wish I saved it. It's very good price action. I learned a few things from it, right? I didn't take trades where I was supposed to. Um, this here also, I want to mark this out. There's a lot of, targets that I believe are valid targets. This is definitely a valid target. Um, it's very good here. Daily Bissy for our Bissy. So we just returned this for our Bissy right in here, and we are kind of delivering from it. Um, so we'll see. We'll see. We'll have to go to a lower time frame, see what exactly what's going on. Kind of ignoring the ES. I usually use ES too for SMRs. Get rid of that too. Uh, so we took out PM highs, failed to take out AM session highs from the day before. In London, now we took out Asia and London highs, so we have this run up here. Strong displacement candle to the downside into that 4 hour BISI, and I do believe we have this fair value gap here on the hourly that we may want to test. So 1 hour fair value gap. In addition to that, we do have our price leg right in here perfectly. So this does look like a change in state of delivery on the 1 hour, and and we have this fair value gap right in here. So we'll just keep this fair value gap alive and understand that, hey, for us to have a fair value gap, we need to have a change in state of delivery to the left of it, at least a SIBI. So, and this here was inverse shroom, so we could see a run back into that. I'm not gonna add that on the chart though, that inverse fair value gap. Um, get rid of this. Right. One of the things that was called out this morning is this Q3 here. Trying to incorporate Q3 theory. So third quarter, we should see retracement to 50% within the next quarter. If not, then we should see it shortly after. So this lines up nicely with the 4 hour order block, right? Oops. hmm Right. So that matches up nicely. 4 hour order block. So we could definitely see this as a target. If we're just going there, that's 50 candles. So more than enough than what we need or than what we need. All right, moving over to the 15. So again, I'm bearish, so I'm just looking for opportunities for price to deliver to, premium fair value gaps, change state deliveries, and they get a return retracement to the downside. So this wick right here is telling. I like seeing wicks like that because on a lower time frame, like yeah, right here, strong displacement. Usually this represents like a manipulation leg, and then we were just moving sideways for consolidating, right? So we have consolidation, displacement, retracement. This is fair value gap, displacement, and notice how we don't take this out. So we have a new low here, run up, and versus fair value gap. So we're moving sideways. So this is bullish activity on the lower time frame. And we're above the New York Open, in between New York Open and Midnight Open. If we were to go back here, I know I'm gonna get back to the 15, but let's look at regular trading hours on the daily. So we haven't opened up yet. Um, wait. Anyways, let's go back to the hourly regular trading hours. Yep. Is that what it looks like? So we have nothing so far for regular trading hours. So this is yesterday. This is where we closed yesterday. And where we're trading at right now is like 47.83. So it's down here. or 84. It's like down here, so we may run up back up, which aligns with that fair value gap. Continue to the downside. Um, yeah, so back on the 15, you know, I was looking at this as a potential manipulation, like from yesterday. Um, if it is, then four standard deviations is this 4 hour BISI, which we met already and tapped in that pretty nicely, right? So that gives me conviction that hey, potentially we may see a reversal, right? Even right here, 4 hour, four standard deviation sideways, run up, down. So that could be the end of the sell model on the 15. And then we have this London manipulation. We always have manipulation in London. That usually marks the start of the day, moving sideways during the Asia run up, then boom, right? So four standard deviations is deep within this, lines up with this Tuesday's PM session low. So although I am bearish, I can expect a move to the upside first, maybe into this fair value gap, and then a move down. So we do have Chicago PMI coming out in 15 minutes. Um, but other than that, going down to the five. Let me log in here. Put that there. I don't need you here right now. And then here we have a move up. Wait a second. This is things globally, but why don't we have it here? Ay, ay, ay. There we go. All right. All right, zoom in here. Again, this is looking bullish to me. We are in Q2, so this is where we can see manipulation on the, so we can see manipulation. So move up into this fair value gap is what I'm suspecting, right? I want to see move up a little bit higher into this premium. So now we are in premium. Now I will be looking for any possibility of a reversal. I don't see anything on the five up here except for this change state delivery up here. Ideally that one. Right. So let's. hmm So 1 minute. This idea to look for a reversal. So we have some lows down here. Um, Manipulation lows were down here. Well, Q2 lows are down here. And notice how we took that out in Q2. Run up, came down, inverse fair value gap, run up, took these highs out, moving sideways, and took these lows out from Q2 on the 90-minute cycle. Run up. I don't see any fair value gaps for us to support at the moment to continue to move up higher. This can turn into a bullish shorter block and that price will continue to move up higher. Right. So right now I'm just seeing on my hands. I don't see any like setups. All that I'm doing is anticipating where price action can move and what that anticipation a setup should present itself. Right. So this is 50%. That's interesting. Midnight open is at 50%. So let me flip this guy around. Yep. So if we get a move up in here, I'll take a market order. Sell in here. Yeah, this 4 hour bullish order block. We can get rid of that. One can see this as a change in state of delivery. This is a 4 hour bearish order block. We want bearish. Yep, so that matched up really nicely with the optical trade entry. So we'll just get rid of that. And this is how we're looking on the 15 or on the 15. We're turning from this 1 hour fair value gap, also the high of this 15-minute fair value gap right in here as well. Right. So again, you know, my biggest adversity is seeing a play actually form, like seeing a setup actually form, instead of getting caught up and down with, this type of price action. Yeah, it's moving down, but as it's moving down, something is forming. And the fact that we're leaving this 4 hour fair value gap has me conviction to go in this position, right? So it's like boom, go in short. And rightly so, we're rejecting, returning from a 4 hour, from hourly fair value gap. Higher time frame is showing that it's bearish, right? And then we get this, and it's like, do I go in? Kind of like what we have happened yesterday. Yesterday was perfect. Look how we run up and we take these highs out inside this fair value gap right in here. It's a little short on this one, but and then something like this happens. Right? So it's like, all right, let's go in for short. Then something like this happens, right? And what is this here? Why isn't everything sinking the way it's supposed to be sinking? Let's go back out. I don't know. I don't know what to tell you. I'm not too entirely sure what this line here is. This is a previous day high constant encroachment. I'm not sure why that's there. So again, this is a manipulation phase, run up, boom, come back down. So what we can do now is we can measure this here and look for our potentially our optical trade entry. And that's another thing that we have to remind ourselves is that you can have a down close down movement. This is one, two, three, four candle run, possibly five. Run up here is where you would enter in for a short position. But it's scary because it's why do we want to short where it's moving up aggressively, right? That's the psychological part that we have to be able to overcome, right? And in overcoming that, what that helps us do is not take impulsive trades like when price action is moving to the downside. That's one. And then the second one is taking the trades where it makes sense to take the trades, which is in a premium for a short, right? So those are the things that we just have to learn to work on. So 15 still moving sideways. Nothing really going on the five besides this huge wick. And we're just in period of consolidation right now. And look where we come now. So this is a 4 hour fair value gap, right? 4 hour BISI. It's expected price to come down here and reverse. Oh man. Only if we did the opposite of what we normally do, we would be profitable, which is the beautiful thing about it, right? Um, so we'll be we'll be good, man. We'll get this together. So if we were to get in the call right here, stick hypothetically speaking, questions where to get out at. Here we have this 15-minute hourly fair value gap, lines up with optical trade entry, midnight open, right? Well, there you go. So this is the manipulation phase. Q3 will be distribution. Notice we have a low resistance liquidity run forming here. Keep that there. Possible one moving down here too. Oh, it's forming a pendant. Ah, you know, almost coming down the constant cross from here. So lower time frame, this looks bullish to me. Higher time frame, of course, bearish. You know, one could see this as our manipulation leg, right? With four standard deviations being way, way, way up there. What's going on with ES? 5 ES taking out this low here. Nice displacement on both these sides here. Uh, I don't see any like setups on ES though. Let's go back out to the 5. Kick it here for a little bit. We do have a fair value gap down here on ES in a discount. That'll be a entry for a call. So if we do this little thing right here, fib, you know, this will be in a discount ideal area to enter in a trade, run back up. And again, I called out being bullish on the lower time frame. Here we inverse this here on the 5 minute, and bodies are respecting it as well as the New York Open right here. So again, like this is an area to enter in. So you got to have like multiple biases, and you have to buy in a discount and sell in a premium. Like this is an area where it would be ideal to sell, right? Like that's like rule number one to being good at this trading thing. And as I suspected, this would be an area to do what? To go for a short. All right, man. So yeah, whatever. And again, price is doing what? Moving sideways. Now explain to me like what setup do you see that will be profitable? There isn't any setups that will be profitable, right? So wait, no, that's not the one. This is the one we want. So with that being the case, it's like, yo, just chill, just chill, just wait. And again, if you cannot reverse engineer the trade, then have no trade. So this green represents distribution, and I just like how we had this low resistance liquidity run right here. And again, we're delivering from this 4 hour right here. So I'll take this for a call. And my target will be up in here, just like a short little scalp trade, right? Stop loss obviously will be up here. Stop loss will be below this low here. We do have a fair value gap right in here. Let's see if that can hold, see if the bodies can hold that. If it does, then we're gonna continue moving up, right? Or we could just wait for the body for price return to this fair value gap. That's what I mean. Anyways, looking at higher time frame, I mean the high would be, I mean ideal would be this area right here, this bearish for the black on 15. Um, right, so that's 1708. And again, we are in the distribution phase of this. So let's see. And I like how we delivered from this fair value gap here. So I'm moving my stop loss up a little bit higher. And we got nice displacement above this high up here. Now again, we're running into this fair value gap. This may be ideally seen as a retracement leg. So to see this become a run up to these highs up here, I don't know. I'm not entirely convinced that that could happen, right? So let's see how this plays out with this bar. We could get a strong little wick, move right back up to the upside. And again, this is a SIBI on the, and we had this 4 hour bearish order block too. So be advised that this could be an exit, right? This is where we should exit. But let's see how this candle turns out. We got a couple more seconds left. That could be a bearish order block, bullish order block if we could close above it. Again, we have this manipulation leg down here, and we test this higher time frame for our BISI twice. Once here, we got the strong displacement leg into it, and this took place during when? What session did this take place during? The manipulation on the 6 hour? No, 7:30, 90 minute, 6 hour, right? Almost taking out lows from accumulation. So we took these lows out here. You can see this here as a bullish order block. Remember, people drink water. This could just be a retracement leg. We're still looking good, still looking bullish on the 5, right? That's the thing about the 1 minute. Like, it will just, there's a lot of fluctuations on the 1 minute. So, for that reason, seeing something like this, it will scare you, right? And then just looking at the amount that you're down, it's like, hey, this is an ideal area to keep your stop loss. Notice how it wasn't hit right. So just keep it there. If it gets hit, it gets hit. And again, we do, this is a very tight stop loss. It's five handles. That's extremely tight. And I like how we're respecting bodies on this bullish order block right here. And we are in a distribution phase on the quarterly theory. So let's just allow this area up here to be tested. And we do have this small little volume imbalance, which we may run back into. We have another one right here forming. Let's see if this remains open. Shouldn't be daily. It should just be volume imbalance. Save as bullish order block supported. Let's see if we can inverse this here on the, this is on the hourly. We do have this on the 15-minute though, right? So on the 15, mean threshold is right here where we are right now on the 15. Let's see if we can close above that. I want to move my stop loss just to break even. Now it's a free trade. Like how we delivered from this bullish order block down here. I want to see this act as support, and I want to see that run higher. And this is a 4-hour bearish order block right in here. Digging up in there, we dug up in there pretty nicely, and it's like we're trying to see what happens. So the question is like, do we take the profits? We're close to reaching our daily goal. Do we take the profits? And these down closing candles, they kind of like freak me out. And the monetary value is like it's nothing, man. Just be patient, right? Uh, I want to change this to fib, no, the quad. And now we do need to see a move down here, like that's part of the game, right? So if we go from here, here's 50%. We want to see this hold. So putting your stop loss above 50% in the premium, price is gonna hit. And seeing these wicks here, if I was bearish, I'd be like, oh shit, not good, because these wicks are bullish. Go ahead, close. Ah, damn it, we didn't close above. So, all right, so yeah, here we do have 50-minute fair value gap here, runs up right into it pretty nicely. And there's my stop loss. That's it. And now we're running back into this discount. So this would be an area to enter in for a call. But given that we have higher time frame, 4-hour order block, almost a change state delivery here, but really ideally right here. I'm gonna see this as, let's see how we respond here. Look how we're supporting right here. So this would be an area where you go in for a call position, right? But let's see how we close. Right up here, 50%, boom. I don't know, it's kind of like 50-50 right now. This is Q3. In Q3, we see distribution. Q4, we see retracement. And this 4 hour fair value gap is holding. So let's take this off the charts and see this as a drawn liquidity. Market structure shift will be right here. And we don't have any fair value gaps that we can potentially run back into. These volume imbalances have bodies closing over them. So I do believe, you know, 50% of this fair value gap right here, ideal area to go in for short. Let's see how this fair value gap right here on the 1 minute holds up. I will enter in short here. And we do have some form of low resistance liquidity run right in here. Fair value gap here. 5 minute change of state delivery. Close below this. We got that. So if we were to measure from here to here, we're at 50%. A little bit lower would be, this is a bullish short of black right there on the 5. That isn't a discount. So we are in silver bullet session. We kind of inverse this right here. So stop loss will be if we close above that. We want to take this low out here. It's target number 1. So run into this fair value gap is permissible. This 5 minute bullish short black here may act as support. If we can break through this, and then I definitely believe we can continue to this lows on here. So take profit. I will go to this wick right here. 13 candle move. I'll take it. 13 handle move. I'll take it. See what's going on with the other guys here. ES still strong. Yeah. So I'm going to take this off. We can collapse this. This worked out pretty well, delivering from a 15-minute fair value gap. We do have our New York open down here. So we've officially taken these out, these lows out. Next target will be these highs right here. If we do move our stop loss down here and it gets nicked, that's fine. Reason being is because this isn't where we enter, and we entering up here. And you see this like, oh, we're moving up higher, moving up higher. Oh, maybe it will work out for us, right? And look at this 5 minute bullish for the block here. 7 seconds left. Let's see how we respond to it. Two, boom. Bear shorter block, hopefully. Volume imbalance right in here. And again, our move into this fair value gap is permissible. So this has been inversed. I want you to actually go inside of the inverse. And there we are. So this has been inversed. A lot of inverses. This 5 minute fair value bullet short of black. If we can inverse this, then that'll be dynamite for a long position. Question is, what do we have here? Optical trade entry. Boom, perfectly. Inverse volume imbalance. All right. Um, I'm done for the day. Full disclosure, I have I have no desire to trade right now. I'm focused on the 1 minute chart, and as you can see on the 15 and on the 5, there are is this consolidation. And what I do is I answer off of plays like this on the 1 minute with the expectation that we will see a significant run to either direction. Taking a step back, the bad habit that I have is I buy at the top and I short at the bottom. And you could get away with buying at the top in this really small tight run or in the upward movement if we're drawing from a higher time frame pool of liquidity and we're going to, you know, a premium, right? In this case, discount premium, or in this case, buy up here on a 1 minute premium and expecting to go up here. I mean, I've gotten away with that so many times, but where I get caught up is doing that in a period of consolidation. That's where you get exposed, you get your ass whoops. So what I want to do is learn how to take trades in premium, in discount, in this case, in discount and for long, in premium for short. And look how we're just moving in between this range right here. So this is very tight consolidation. And then on this hourly fair value gap right in here, we would ideally want to see a run up and move down, aggressive move down, but we're just not we're not getting that today. And here we just moved up into this premium within this price range right here. That's where you enter the short. And then in this fair value gap right here is where you go in for a call. So I'm going to go in for a call here. And my stop loss is at this low here. Now, this is an extremely tight stop loss. The reason why I have it below here is because if this fair value gap inverses, then the chances of moving back up higher is it's eliminated. And then we do have sell side here, right? So if we do sweep this, we could continue moving up, but if we do inverse, then we're definitely coming down for these lows down here. My take profit, this would be like target one, and again, this is only 6 handles, so it's not much. But we don't need 1,000 handles to be successful. And then number two, it's you're trading in a period of consolidation on a higher time frame. You're not going to get really nice moves up and really nice moves down. It's best to come back during a period where we can expect and now when I see algorithms to be triggered, right? So that would be the afternoon session. And look, this is gonna get hit. Boom, done. So it's a combination of reduced amount of handles or contracts you use in this period, and then just don't trade it. And relying on the 15 minute, like this is where we are in the 15 minute. Where would be the excuse me, where would be the higher time frame drawn liquidity up here and down here, constant goes from here and here, and even coming down here. So that's where we set our alerts, and we let all of what's happening within here transpire, right? So that's the plan that we have. So um, it's got to be disciplined and stick to it. It's the bottom line. Anyways, it's the last day of the trading day or trading year. Had a phenomenal year this year. Learned a lot. Um, very proud of myself. Have some big expectations for next year. And look how this fair value gap is just held. Boom. So this is where you go in for a call position, right? Take profit near a swing high here. Sell this low right here, which is forming. And let's see. So this is my last trade for the year. And I'm done. So it's good that we're taking, draws and liquidity on a 1 minute as opposed to say, we're gonna go on the hour. I mean, there's nothing on the higher time frame we gotta draw liquidity. So your expectations have to be what just happens. Okay, expectations have to be um, controlled. So let's pretend like we are doing this for real. So boom, alert here. Boom, alert here. Because that's cost per crushment of this 15-minute wick that delivered from this 4-hour fair value gap. Boom, here, boom, here. That's one. The next thing to do is to come, we have our alerts here. This would be an alert here for the afternoon session, right? And then we keep looking at our quarterly theory, see where we are in the grand scheme of things. So this is distribution, and we took out these lows right here from the New York PM session low from yesterday. Took that out, and that's it. Boom. Now we look for a long position. Like, look, we're gonna get stopped out. Boom, stopped out. And then looking at this 15-minute and versus this, and look how the bodies are failing to breach above. Well, this is the hourly. Boom, 50% bodies are failing to close above. You can't set an alert to alert you on that. You have to be in front of the chart and willing to sit and view it, right? Other than that, we don't have anything. And these are the plays that I don't want to miss. But these are also the plays that will force you to stay in the trade and do one of two things. One is practice discipline to be patient and allow for this to take place to transpire. And the key to that is understanding, hey, this is what can happen. We have this fair value gap. We can see bodies fail to close above 50% of it. So therefore, we can keep our bearish attitude. But then it's like, when do we get in? When do we get in this trade? And this right here, this is called Chop Shop City. Your higher chances of getting this trade is at the high of this. That's if we get there, and if we do get there, oh, it might continue going up. And if it does, then you get out for a really tight stop loss. But to try to scale in here, I mean, right here is an ideal setup, right? We reached the high here, failed. Here, boom, equal highs up here, they're going down. So the other one is to just be disciplined and just sit here, right? Do something else as you watch this. But anyways, this isn't ideal price action. I mean, there was no draws on liquidity on higher time frame. There were no session draws on liquidity. Um, unless you're gonna play this on a 1 minute or 30-second time frame, I really don't see any setups. But we did get our daily goal of $600. No, 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 $400, and that's all we need. Again, do that every day. And yeah, man, let's do that every day. Until we could pass this combine. Look, I mean, I really don't care how much time it takes, and I really know that 2020 days, it's just 4.5 weeks, a month long. I don't care. It's not gonna take me a month long to get that, but that's the beautiful thing about it, right? In that, multiply that by five, that's 22.5 weeks. It's almost 25 weeks, but anyways, 400 times 5 times. We want to target 25 weeks. Go ahead. It's 50K. There you go, right? It's just anyways, I'm done talking about that. So yes, this is my last trade of the day, of the year, and we'll be back next year. Happy holidays, happy new year. Peace.